What's up, Kryptonites? Welcome back to Kryptonite, because I believe that cryptocurrency and the blockchain are the kryptonite of our modern financial system, and I love it. Guys, we are back on the channel for another episode. And guys, look, I'm going to be honest with you. I'm not going to lie to you guys. I'm going to be honest with you. I'm going to keep it real. Whether I win trades, whether I lose trades, I'm going to show you exactly what I've done, my thought process, because I want to be accountable. I want to be accountable not only to you guys, but to myself. I don't want to be one of those people that just pretends like I've won a bunch of trades just to get views, right? That's not what I'm about. I'm an honest person. I'm a person of integrity. And guys, I have to tell you, I have lost some trades here, and we're going to go over those, and we're going to try to figure out what mistakes did I make during these trades that potentially are the reason I lost them, right? Because every losing trade you have to just look at as a learning experience. I look back, what was my thought process? What was I feeling? What was I experiencing? What things did I see? What things did I ignore? These are things that we need to look at so that way next time I don't continue to make the same mistakes, because as a trader, your habits are really crucial to your success. Doing technical analysis is not really that difficult. Anyone can learn technical analysis. What is not easily learned, why 95% of people fail at trading, is learning the psychology, the emotional management, the habitual nature of the things that you have to correct continuously, and a lot of self-awareness of just understanding what your weaknesses are, what mistakes you make, journal them every day, look over them every day, and understand how to negate those weaknesses and how to really strengthen, the trades you do best at, how to have the self-control to stick to those, guys, because the self-control aspect of trading is absolutely massive, absolutely insane, because you could literally take a trade at any point in time, any day, any time, any minute, you can enter a trade. So how does somebody have the self-control to only enter in certain situations and to be able to do that consistently while they're emotional? I might have had a bad day. I might have had something go wrong. Now I'm emotional. Now I'm triggered. Now I'm using that primitive part of my brain that just wants to act instead of using the frontal cortex of the brain, which is the critical thinking and making good decisions, right? How do I keep the blood flowing to the frontal cortex? Because when you get emotional and you get fearful or greedy, the blood flows to the more midsection of the brain. That's the more primal brain. That's where your body just wants you to do something, act, flight or flight. That's where that blood goes. When you risk your own capital, when you risk your own money, your emotions are ignited. The fear, the greed, they are causing that blood flow to the primitive parts of your brain, which causes you to ape into trades. And even the most experienced trader deals with this on a regular basis and has to learn how to manage these emotions. And that's one of the reasons why I have really enjoyed the process of trading, because it has caused me to actually have to make myself into a better person. As weird as that sounds, I have to journal every day. I have to be self-aware. I have to add other routines in my life, like mentally, like whether it's praying or doing different things to have that self-awareness, to have that mental just lightness, to where when I'm trading, I'm not trading out of fear. I'm not trading out of greed. I'm trading from a place of contentment. I'm trading from a place of just kind of robotic, no emotion. I see something, I do it. And you just rinse and repeat, right? That is the real challenge. And that is why 95% of people cannot trade, because most people struggle to manage their emotions, especially when it comes to finance, especially when it comes to your hard-earned money that you work your freaking behind for, that you have to risk while trading and risk taking those losses. So I enjoy the challenge, the mental challenge of trading, and I will continue to hone and work on myself until we are at that point where we are a very profitable trader. All right, guys, without further ado, let's jump into the charts. I'm going to show you, as you've been staring at this chart of Bitcoin right here on the monthly charts in this falling wedge pattern, which we've been looking at for quite some time. Just only wanted to make note here of this current monthly candle, which if we look, it still has 27 days left. So plenty of time for this candle to change. However, right now I do not like this candle. It almost looks like what we call a bearish channel. So if you get a down swing here and then you get a straight vertical channel, right? I'm gonna start drawing stuff on my charts here. Hopefully I can. So if you get this straight channel here like this, right? That's a very bearish channel. Okay, that's not good. We don't want that. But obviously we still have a whole month left for that candle to change. So lots of time to turn things around. Let's jump into the weekly charts here. And as you can see, guys, I've been talking for a while about this right here. Why is it? No. So right here we have a candle, and I'm kind of annoyed that there's stuff there that's blocking. Move out of the way there. This candle right here I've been talking about as a potential tweezer bottom, meaning that the close of this candle and the open of this candle are literally the exact same, and that tends to be a trend reversal candle. However, with a day, almost 2 days left on it, we are losing the bullish nature of this candle. Before it was a bullish engulfing. So if you combine the bullish engulfing with a tweezer bottom, that would be a massive sign of a trend reversal. However, as you can see, we have this wick here because we've lost those levels, and so we're making what's called an inverted hammer candle. Shout out to Tyler Brandt. He loves those hammer candles. An inverted hammer is a hammer that is just faced the opposite direction, right? And the beauty of this is that this can still be a trend reversal candle. This inverted hammer can appear at the bottom of a downtrend, and it could signal an uptrend. So even though it's not as strong, in my opinion, as a full bullish engulfing tweezer bottom, we still currently, hopefully for the next 2 days, we'll see what happens. We currently have that inverted hammer bottom. As long as we see some follow through the next week, that could signal a reversal. That could signal higher price targets. If we pull out the Fibonacci level here, oh no, we don't want to do a trade. Sorry, we want to pull out the Fibonacci. We can see that we are trading right at the 236 Fibonacci level, and that is pretty much right where, it's not exact, but it's very close to that 236 level, which is a retracement level. It's not a strong retracement level, guys. You want it to retrace off of the 618, the 0.5, or the 382. Those are the really powerful retracement levels. So the fact that we came all the way down to the 236 is already kind of a bearish sign that we are retraced that far, but it does not mean that it can't still reverse back up, with our first price target coming in at 25,000, and then upwards price targets of around 30,000, and then if it continues to run, it could see higher price targets. So still waiting on that weekly candle. We are again holding this level, this 19,000 area, 500 area has just really held pretty strong. All right, on the daily chart, as you can see, just a little closer zoom in of our falling wedge here. We had our wedge breakout down, continuing this falling wedge pattern, and now we're consolidating into a very bearish looking, another kind of bearish consolidation pattern. However, as you can see, we actually broke our falling wedge trend resistance right here. And you'll see in a moment why this did not work out for me as far as my trading went. And I still was actually kind of correct overall in my technical analysis, but you'll see why I did not win these trades. But obviously you can see this type of candle is not a great one as far as, hey, we broke this level. You want to see a bullish candle. You want to see it break the previous swing high. Nice full candle. You want volume, and that would signal a true legit breakout from this falling wedge pattern, which would take us up to the first price target. If we take these two here, we will get our, we'd get our first price target here at about 22,000. And then the full technical price target would be all the way at the top of the wedge, up around 25,000. thousand. But as we're looking at this, we are not seeing. It's looking a lot more just like a fake out. Just basically it trapped some traders who were looking at this, saw a breakout from the falling wedge pattern, took long positions, big money, then took that liquidity and sent the price downward. This is very common. You get these strong resistance levels, but you have to look out for liquidity grabs where you get that it looks bullish on certain time frames, but if you don't wait for candle closes, especially on the longer time frames, then that just gets dumped right back down into the pattern and you get tricked. This one, obviously the pattern wasn't developed yet, but as you can see, we broke past these previous resistances there, took liquidity down. This one might have faked a few people out, down. This one stayed pretty nice and supported, and then this one faked people out and now is going down back into the pattern, most likely, but we'll see what happens. So let's jump down to the 12-hour time frame. As you can see, and let me show you here real quick. So we actually that still looks pretty good based on those tops of candles. So you have different ways you can draw this. Some people like to more draw on the tops of the wicks. Some people like to draw kind of more on the tops of the candles. I tend to go more with the wicks because sometimes it can break. You think it's breaking out, but then it's just continuing the pattern. And if you had it drawn out farther, then it would have respected the pattern. So I tend to like the wicks a little more. But for what I'm going to show you here, I'm actually just going to show you the tops here. And it actually is interesting that we came out and we dumped right back into that area. So that's actually, I did not see that before. That is interesting of note there. Let's jump down to the 4-hour candles here. So here's what I'm talking about with the fake outs, right? And you'll see I was unfortunately lost some trades because of this. Not because I went long, and you'll see. But I look at this big candle, even on a this is tough because on a 4-hour, right? If you saw this breakout, a 4-hour candle close, that's a strong close, right? If you get some other confirmations, you're taking a long, right? And you're expecting it to, at worst, get to the top of this pattern. At best, see some sort of reversal here. However, like I said, you need more confluences, and one of the confluence two things we didn't get right here. Usually when you get into a pattern like this, the volume starts to slow and get lower and lower and lower. And then it sort of crescendos, and then you get a breakout. This one, though, if you look at the volume, and we'll look at it on another chart later, it actually spiked quite a bit up and down, which can actually kind of negate the pattern, or at least the legitimacy of the pattern. You want the volume to be high, and then get less and less and less and less, and then you want to see big volume out the top. So this was spiking a lot in volume on these dips and things, which again kind of basically makes the pattern not really viable. And as you can see, we broke out, nice 4-hour candle close. A lot of people probably went long there, thinking, hey, we broke out from here, and then immediately dumped back into the pattern and is now currently respecting the pattern, even making somewhat of, I think, another bearish kind of consolidation here in the middle of the range. Yeah, as you can see, I kind of drew this little bear flag kind of pattern here that we kind of broke down out of, but we're getting supported by these ranges, have kind of been support within this pattern a few different times. So I've kind of kept those up as just little areas to watch. And we are getting a little bounce here, but we are still remaining in this pattern. And you could technically even redraw this pattern at this point. You could essentially redraw it like this, in which case we're in basically a longer consolidation, right? Maybe it comes back all the way up here and then all the way back down. So this is essentially signaling, hey, we got a lot longer to go in this consolidation here before anything happens, which I wouldn't mind because then I can just trade the tops and bottoms here. But we will see. Got that 200 moving average coming in here that might force us out of the pattern to the bear side. Yeah, as you can see, that 200 there. As you can see, the 200 forces look at this right here. You have this bearish flag. People want it to go up, but the 200 actually drives the pattern out, right? It got so far away from the 200, started to make its way back up, and the 200 said, nope, we're going back down. Kind of a similar thing happening here where we got far away from the 200. We started consolidating, and then now the 200 looks like it's forcing us back and potentially forcing us out of the pattern once again. So I am looking for lower price targets, most likely based on this, unless we can get a break above that 200. So you can see that nice rejection there at the 200 on this chart. Yeah, now as far as what I'm doing as a trader, I'm currently in a position, like I like to say, I'm currently in a live trade. But guys, I'm going to show you the brutal. This is brutal, guys. I don't want to show you this because it's embarrassing. But, I'm going to be real with you because I got to learn from my mistakes here. So here's a couple of trades. Let me explain my thought process to them. So this one happened yesterday. And as you can see this nice red line here, we were coming up to that strong falling wedge resistance, which I'd won some trades off of previously. If you watch my previous videos, I go over every trade I take and all the ones that I won. And I was on a nice winning streak. I'd won, I think, 8 out of the last 10 trades. Was doing super, super well. We came up. We got a, bearish candle rejecting off the 200. We came up again. Another bearish engulfing candle rejecting off the 200, rejecting off of this long-term trend resistance on top of my horizontal kind of support there. Plus, when I looked at the indicators, again, we're almost oversold on the 15-minute RSI. We were oversold on the stochastic here, as well as the 1 hour stochastic. When I was looking at the divergences, we actually had a bearish divergence right here. You can see that lower low there, or that lower high, higher high. Another thing I was looking at was the volume. I don't have my trades marked up on here, but we were making these, the volume was going down even though the price was going up. So I had pretty much very strong confidence that we were going to get rejected here and that we were going to continue back down in the pattern. And look what happened, right? We came down, it's looking good, and then we stopped me out of my trade right here. And guys, this is a trade I'll probably take every time. And I think most of the time I'll actually win this trade. But again, like I mentioned in my last video, sometimes at some point the trend breaks. And at some point, the probabilities as a trader, you're going to take that trade that looks perfect in every way. And it's going to be finally the time where a trend breaks or you get a liquidity grab. And those are just sort of the probabilities that you have to just deal with. And just say, oh, it was just, 70% of the time it's going to respect the trend line and it's going to continue in my favor. And then 30% of the time you're going to get a liquidity grab or it's going to break out and you just have to take those 30% losses. So this is a trade. I feel really no shame about this trade. I would take this trade over and over again. The only thing I could have waited for was maybe the RSI and the 15 to get fully overbought before I got in. That's the only real sort of thing I feel like I did wrong in that scenario. Here, as you can see, I tried to get into another position because I still felt like we were going down. I didn't see the volume support at all in this breakout. I thought this is a liquidity grab. There's no volume here. A lot of the indicators are overbought. We're having divergences. Okay, I'm going to say, sucks I lost that one. Let's try one more. And as you can see, guys, once again, I was stopped out. And then right after I was stopped out, we immediately dumped down and we hit my exact price target that I had on the second trade. So just unfortunate, I just didn't have my stop loss quite high enough. And we made one more push before coming down to the price target. So I was right in terms of where I thought the direction of price was going, but I just got bad luck with the stop loss. This is one where, looking back on it, we were too low on the RSI for me to take this trade. I should have waited. And as you can see, guys, right here, look, we got overbought on the RSI and we had a divergence. We had a lower top there with a higher top. And then we came down, right? And even our RSI on the hourly was a lot higher. So I regret taking this trade because I should have waited for more indicator confirmation, especially with this RSI. It was right in the middle. It's okay if it's in the middle on the hourly. I've noticed I can still win trades even if the hourly RSI is in the middle range, but the 15-minute needs to be in my favor. It needs to be overbought. It needs to be showing signs of reversal. So I do regret the second trade. This is a trade I will probably not take again because of how low we were on the RSI. That was not a good move. Not a good move. This one, again, I'm taking 10 times out of 10 every single time. I'll win 70% of them, and I'll deal with the 30% loss. So I'm totally fine. This one, though, again, did not wait for the right confirmations. So here's the third trade I'm in, and I decided to take a long because we got a nice 3-line strike. And if you guys don't know what a 3-line strike is, it's 3 red candles with one sort of engulfing the previous 3. It's called a 3-line strike. It's a very powerful candle formation. And we got a nice bullish 3-line strike from this support level, this horizontal support, and then also you could kind of draw this out for some short-term trend support. So I did take this long position. Definitely a risky trade just because we've got sort of the trend going down, and especially since we sort of hit the top of this pattern. If I can, where'd it go? Where did my old chart go there? We just hit the top, but again, I was saying, hey, look, we were coming now. We're very near our support level here that supported us 1, 2, 3 times, and it was nice horizontal support. So I figured it was worth taking a kind of a scalp long position, see if we could work our way back up to the top, and we may still do that. We'll see. The 200's kind of potentially keeping us down here currently, but it could easily break up above that in the short term, come up, retest this kind of new pattern almost now. So it could also come down though too, and maybe double bottom here and then come up as well. So we will see how that position turns out. Again, we were oversold on that RSI on the 15-minute, and we were close to that on the hourly. So that's another reason why I felt good about going in. Put my stop loss below that horizontal. So I do actually like this trade. I think I have a decent chance of winning this trade if the pattern decides to continue. But of course, we do have to worry about the sort of on the longer time frames, that 200 moving average forcing us out of the pattern. It might be time for lower targets. If we jump to like the 4-hour, for example, oh, actually that one's pretty far away from it. There was one I was looking at. I thought, oh, here we go. So the 1 hour, as you can see, right, it's pushing us out of the pattern right here on the 200. So, but we still have a little bit more upside. We could come back up, retouch it again, maybe not make it to our trend line here just because the 200 is going to, force us out as it has a few different times. So we'll see how this trade turns out. Another thing I was looking at was the DXY, and I believe when I initially took some of these trades, the DXY was kind of at a support level, if I remember correctly. Actually, let's see when the time was. This candle occurred at September 2nd, 11:15. I got in my first trade, September 2nd. Oh, okay. So never mind. So that actually hadn't happened yet. I know we were near support level. Yeah, so if I go to September 2nd, 11. So actually, this is when I was actually asleep. I was asleep during this. If I had seen this, and this is one thing that I'm going to have to make an adjustment on as a trader, is I will have to start waking up earlier. I've known this for a time. I'm a bit of a night owl. It's like 1 a.m. right now. I'm making this video. But the most of the volatility in the markets is during the London session and the New York session, which I'm typically asleep for. And so it's something I've been journaling about needing to make the adjustment of waking up a little bit earlier so I can catch some of this volatility, because I've seen so many moves that happen when I wake up and go, oh, that move was so obvious. Like I could have easily taken that trade. Because look at this. I already feel pretty bearish. Again, we get that nice divergence, oversold in the RSI. We're high on this one. I don't know if the stochastics were, stochastics would have been in line as well. So I probably would have taken another short position right there, unless, and I think we had another divergence as well, if I'm not mistaken. We definitely had a strong divergence right here. As you can see, the higher high, lower. So strong divergence here at this. Well, it wasn't a line. I wouldn't have had that line up before. I'd moved that line. But I think, and then the last thing I probably would have checked was the volume. Let's see if we did get a nice little uptick in volume, I will say. So that might have made me second guess. Although look at this, we went down. Actually, no, because I would have seen this right here. 1, 2, 3. Decline in volume on 1, 2, 3. Plus that head and shoulders. Looks like that's a pretty nice head and shoulders pattern right there. So there's a lot of things that would have been telling me go short here again, right? But I was asleep. So it's just an adjustment I'll probably have to make at some point. If I really want to make some money, I got to be there for when it's most volatile. It's most volatile during the London and the New York sessions. So Yeah, it sucks to lose a couple trades in a row. Again, I could lose this one too. The silver lining, I did win a trade on the NASDAQ right here, which I'm going to show you guys, which was pretty textbook. We had this rising wedge, which we broke out of. I was awake here to catch the break of our moving average, and then a nice smiley indicator here kind of giving me a signal of like, hey, just some extra added confirmation. We had a nice bearish divergence right here, oversold on the stochastic. Took this trade right here, ran it down 1 to 1.5, took profit here at the support level. I thought about letting it ride down to the technical price target, which is down here. Next time I'll probably try to leave some profits there to maybe ride down there to the technical target, because I did see that this was pretty strong support here, and so I was kind of concerned that it was going to get a bounce, but it did end up coming down and hitting the technical price target. But I'm happy it won that trade. It was nice to get back in the W column for the day. So yeah, that is pretty much all I have for you guys today. As far as what I think is going to happen in the future, I still am looking I'm looking at lower targets, just because, again, we saw that candle on the longer time frames looking pretty weak as far as really truly breaking out of our falling wedge. We just look like we're in essentially just a larger consolidation, a larger triangle here. So nothing's really changed. But now we have the pressure from the 200 potentially forcing us out of the pattern here pretty soon. So we'll see how long we're able to sustain this pattern here before it gets pushed out potentially, and we go to lower targets, guys. Now, what are those lower targets? That is a great question, and honestly, I actually didn't prepare for this, but we'll do a quick markup here, and we'll see if we have any levels here that can tell us. Obviously, our super strong level is going to be here at 17K, so we will throw a line here. And it looks like we've got some pretty strong support around 19,000 on the dot. We got some nice touch points there. So it looks like if we lose this level here around 19,500, because obviously now we kind of have these strong support here with this almost like triple bottom kind of looking thing, then the next target you would want to look for, and it looks like we'd almost come right back into our falling wedge pattern too, right? If we do break this to the downside, we break back into the falling wedge, and we come down, and our next target would be right here so right now we're currently still sort of somewhat out of this falling wedge trend line, but if we get forced back out, we'll get forced back into the pattern, and then down here to about 19,000 on the dot, where we've got some strong support there. So that is where I'd be looking to. I have that little mini long position, but I am looking to short again once we get close to the top here, or if we get a rejection from that 200, and I'm looking to potentially ride it past, so expecting it to force it out, ride it down to this level here. So that's kind of what I'm looking at for the short term for Bitcoin. Again, everything in the macro environment with the government looks like they will continue to do everything possible to kill risk assets, to kill Bitcoin. And that's okay, because what doesn't kill you makes you stronger. One thing of note too, if you look at the previous bear markets for Bitcoin, we've always dropped. The first bear market was about an 85% drop. The second one was about an 83% drop. We're only at about 75% on this drop. So my expectation is actually something like this. I think we're going to come down from our all-time high, and I think we're going to drop about 80%. 80%. Right? So we talked, so it's as you know, as things get more adoption, it will be less and less volatile over time as it gains adoption. So if we're thinking, okay, it was 85, now it's 83, we're going to go 2 to 3% less. 80% would put us right around 13 to 14,000, which again, if you look in line here, is we have another little high here, and actually that's in line with the tops of these candle closes here along our previous high here. So that would be actually a very, very strong support level. Look at that. We got rejected basically right there. Those candle closes took us down from that point, and another rejection here at that same point before we broke free of it. So this would be a very, very strong level here, I think, for the potential bottom if we go that low. We might not go that low, but there's a possibility that we do go that low based on the macro environment, unless the Fed just starts having to print money here again pretty soon, which they probably are doing. We just don't really know about it, or most people aren't aware because it looks like they're trying to fight inflation. But this is just the cycle, guys. Don't freak out. No need to worry. It's not financial advice. I'm not a financial advisor. Make sure to do your own research. I'm going to continuously buying Bitcoin all the way down because I'm not stupid enough to think that I can time the exact bottom. Nobody can. So I'll be buying, if we get back down to 17,000, I'll be buying some more. If we get down to 16, I'll buy some more. If we go to 15, I'll buy some more. If we go to 14, I'll buy some more. And I do have cash and powder on the sidelines waiting to be deployed potentially if we hit those lower price targets, because that is what as long as you believe in the fundamental asset, then you need to buy the dips essentially. And this is the ultimate discount on Bitcoin that you're ever going to get. 70% right now, but potentially 80% discount on Bitcoin from the all-time high. That would be quite a deal, ladies and gentlemen, and a lifetime potential deal at 80%, $13,600. Man, that'd be sweet. I'd love to get me a full Bitcoin. Let me tell you, that would be it's on the bucket list to acquire a full Bitcoin. Guys, as always, make sure to save your money, grow your money. Make sure to buy yourself some good old Mr. Bitcoin, because we all know that fiat currency, which is debt-based, it's a debt-based currency, will not last, as no currencies really have lasted other than things like precious metals, your skills, and I think something like Bitcoin. Yes, guys, the US dollar is a meme coin. We know this. It will continue to get printed. Guys, thank you for being on the stream with me, and I will see you on the next one.